The placement of AMC Entertainment on the threshold list indicates that the stock continues to be heavily shorted on Wall Street and that much of it could be due to the illegal practice of naked short selling. This situation could set up AMC stock for what is popularly called, quote, the mother of all short squeezes, or the Moass. Guys, we got a lot to talk about in today's video. We're going to be going over this article that is talking about AMC potentially going through a short squeeze over the next couple of weeks, over the next month or two. Now, I also want to focus on some of the data that is coming out with AMC today. AMC still on the threshold securities list for over 3 weeks now. Cost bar rates remain to be in the 200 to 300% range. You do actually see a lot of option activity for this Friday as well as next Friday, and the FTD's still out of this world. So we have a lot to talk about. The work is cut out for us here in this video. Hit that like button and subscribe to the channel if you own AMC, if you want to see the stock go up, if you want to make money. That should be every single one of you guys right now. Tap, tickle, touch, or smashing that like button. That is an old one for the OGs. Now, let's get into exactly what is being said in this article. First things first, then we'll dive into the data and a little bit of what is happening today in the market. So it says AMC is widely viewed as a meme stock, and it has been caught in short squeezes multiple times over the past 2 years. Most recently last August when the share price was pushed above $25. AMC stock began this year trading for under $4 per share. Should the price rise again, traders and investors, including well-capitalized hedge funds, would be forced to buy the shares they sold to prevent losses, pushing the price up even higher in what is known as a short squeeze. Pretty straightforward. Now, why it matters. Naked short selling is illegal in the US as it is considered a form of market manipulation. The proliferation of naked short selling in AMC stock shows there is still interest in betting against the world's largest movie theater chain. The company struggled mightily during the pandemic when its more than 10,000 theaters were forced to close or operate at a reduced capacity. There continues to be speculation that the company could file for bankruptcy. This event would almost certainly send its stock lower. However, the widespread shorting of AMC stock sets the shares up for a potentially huge short squeeze in the near term. Some retail investors have been waiting for this scenario, particularly those congregated on the Wall Street Bets subreddit. A big run-up in the price of AMC stock could benefit retail investors in the short term. However, short squeezes almost always end badly once the stock is sold. Profits are taken and the share price crashes back to earth, often lower than where it started. What's next for AMC stock? Well, it's up to regulators such as the U.S. Securities and Exchange Commission, SEC, to crack down on the practice of naked short selling and market manipulation. Evidence that AMC stock continues to be heavily shorted sets the shares up for a potentially big squeeze in the next coming days and the next coming weeks. Whether the big short actually happens remains to be seen, but investors should continue to be cautious with AMC Entertainment stock. Now, that's exactly it, and they do actually link this this article in that Market Watch article. This is an article that we have already went over here on the channel from the street. Now, what is interesting about this is it's starting to get more attention because Adam Aron apparently asked the New York Stock Exchange and FINRA to look closely at the trading of AMC. A lot of people in the last video when we first mentioned this on the channel were skeptical, right? For good reasons, because look at what they're trying to do March 14th. It's hard to look at a scenario where Adam Aron is trying to call out the naked shorts, when in all reality, the naked shorts and just the heavily short activity we have seen in AMC as of recently is due to the actions of AMC. Now, I'm not here to argue if this is the right move or the wrong move. I think either way you put it, someone calling on the New York Stock Exchange and FINRA to look closely at the trading of AMC is never going to be a bad thing. And I think there has been a lot of naked shorting, and we'll talk about that a little bit more in the next video. But really, when it comes down to it, this catalyst, March 14th, has not been so easily as hedge funds thought it was going to be. So there has been a lot of shorting. There has likely been a lot of naked shorting, and the FTD numbers that we are seeing does support it. I mean, we're on the threshold securities list, but the actual numbers here are very, very high. So for today, you're seeing about 3.6 million failure to delivers that are coming due per the T+35 settlement time. Tomorrow, you're going to have 1.5 million FTDs that do come due, and tomorrow is going to be Friday, and you are going to have some big economic data as well coming out tomorrow. We'll talk about that a little bit more in some of the next videos. Now, for next week, that's going to be the big week of volatility for AMC. This is the week where AMC could literally double or triple in price or fall 50%. Now, I think the double or triple is a lot more likely, since after all, it's pretty well established this vote is probably going to come back as a yes. Now, due to the court proceedings, nothing's going to happen for a while. So I don't really forecast AMC dropping that much. Even when you look at the litigation that is going to go to court, it's clear that there's a case there. So I think even by April 27th, we're not going to have a definitive answer. I think any judge in his right mind would entertain that, and that's going to mean kicking the can further down the road, and I don't really think it's going to pass through the courts, to be quite honest with you guys. So I think ultimately this event will send AMC stock up higher, whether it happens next week or whether it happens in a month from now, or little over a month, April 27th. I think it sets AMC up for a very bullish scenario, especially when you consider the naked shorts, so on and so forth. But for next Monday, you start off with 1.8 million FTDs. Next Tuesday, 2.4 million FTDs. Next Wednesday, 3.4 million FTDs. Next Thursday, 3.9 million FTDs. And next Friday, 6.8 million FTDs. Now, as you guys know, there is a lot of option activity that also comes due on March 17th. There is also a lot of option activity for tomorrow, for this Friday. Calls that are in the money sits at 7,000. Calls that are out of the money sits at 167,000. That's a lot. That's a lot, guys. Huge numbers. In the money puts at 80,000 for this Friday. Out the money puts at 97,000. Well, take a look at next week for March 17th. About 40,000 calls in the money, 651,000 calls that are out of the money. In the money puts at 255,000, out of the money puts at 912,000. That's ridiculous. And I think this kind of option activity, as well as the naked shorting that we've likely been seeing, will continue to keep AMC on that threshold securities list. And especially next week, I do want to elaborate on this more in really its own video, but I think due to the scenario that we have here, you could see a very big short squeeze. I think the short interest at this point, it's pretty clear to see, is a lot higher than where we are currently at, and I don't think hedge funds are fully positioned for a rally in AMC. Like, what are they going to do? They're going to end up covering on those positions. We'll talk about that a little bit more and go over some of the numbers again in the next video. Now, as far as what we have broad market wise, tomorrow, the non-farm payrolls for February. This comes out at 8:30 in the morning. You are expecting 210,000. Last month, though, you expected 200,000, and it came out at 517,000. So if this number comes in, you know, higher than 210,000, maybe it comes in at 300, 350,000, that's probably going to induce a pretty big sell-off in the broad markets. It would be hard to see a scenario where AMC came out of that unscathed, right? Now, you also have the unemployment rate for February. That was expected to come out at 3.4% last month. It came out at 3.4%. We're expecting another 3.4% for February. So I think this will be very interesting, and kind of goes hand in hand with the non-farm payrolls. If this data is as well showing it's super hot, well, we're going to be in for more Fed rate hikes, and the markets are going to start pricing that in pretty aggressively. Now, just over the last week, you have went from pricing in a 25 basis point rate hike to pricing in a 50 basis point rate hike. If this data comes in hot tomorrow and the CPI report next week comes in hot, you're going to start to price in a 75 basis point rate hike, and that is what is ultimately could trigger a lot more downside from here in the broad markets. Now, if we switch gears a little bit and go over the Ortex data of what we are seeing on the day, the live short interest of free float is sitting at 24.84%, which is very, very high, pretty much around that 25% that we have been at for a while now. 127.84 million shares that are currently sold short. The legal short interest, as a lot of us would call it. Cost bar average 255.32%, cost bar max 278.9%, cost bar minimum of 225.58%. If we take a look at interactive brokers, you could see a 102.5% cost bar rate with 1.4 million shares that are available as of right now. If there's so many shares available, my question is, why are we still on the threshold securities list? That, I think, does provide a little bit more credibility to the naked short argument, right? Because a lot of that has to do with there's not a lot of shares available, so people just naked short the stock. Or even the FTDs, when there's not a lot of shares available, is when you get the failure to delivers, because apparently there's not enough shares to locate to close out those short positions. Now, the option activity for the day, no surprise, it is super negative. Positive order value of 2%, 15 orders totaling $6.28 million, guys. So that is going to do it for this video. We have a lot to go over today. We just can't shove it all into one video. We gotta break it down a little bit for you guys, so we're not making like an hour long video. So that is gonna do it for this one. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I'll see you in the next one.